Welcome to HDFC Bank Money Talk. Money Talk is a series of videos to help you understand the world of finance and economics in a simplified manner.
I'm here to talk about some economic indicators that you read off in the papers but might be wondering what they're all about. And let me talk specifically about the Index of Industrial Production, or the IIP. Let me first address the issue of what an index is. An index is a basket of various things. It could be prices, it could be production of different commodities compared to a base year. So if the index is say 120 in 2013 or November 2013 say, it means that compared to a base year, say 2004-05 or 2009-10, production has gone up by 18%. Now this is an index in general. If you apply it to the case of production, and that's what the Index of Industrial Production does, it really gives you the relative performance of a fixed basket of goods relative to the base year. And if you compare different indices for different years, you can actually compute the year-on-year change. For instance, whenever you read the papers, you will see the growth in industrial production relative to the previous year. So if the October Industrial Production Index came in at say 2%, it would mean that compared to October last year, that's 2012, industrial production was up by 2%. Well, I sort of misled you. The actual production growth for October this time was actually not growth, it was a decline of 1.8%, which means that in terms of production, economic activity, at least industrial activity, we are doing fairly badly. And this has been an enduring story that has been around for more than a couple of years. So we are in the middle of an industrial slowdown. A few other things about the index. The index has three principal components. One is manufacturing, and that's a critical component. Then you have electricity, which might not be a good in the classical sense of the word, but it's an important component of industrial activity. And then you have mining, which is coal, oil, and so on. Why has industrial production been faring so badly over the last few years or months? I think some of the things, some of the explanations are very obvious. We've had the so-called policy paralysis in the economy, which has led to a slowdown in investments. The global economy has been doing very badly, so our exports haven't really done too well. What is the situation likely to be going forward? I'm actually fairly hopeful about production prospects or the prospects for the IIP going forward for three reasons. One, I think exports have started picking up and will pick up. There are signs that the global economy is picking up. Number two, I think investment projects are being executed better by the government, and some of the bottlenecks that were preventing these projects from getting off the ground, environmental regulations, etc. Those are being addressed, and addressed fairly aggressively. And finally, I think once the election-related uncertainties are over and we have some kind of a stable new government in place, I think the animal spirits of the private sector will be back in play and they will start investing. So once they do that and setting up capacity and so on, the combination of consumption demand, consumer spending, and a rise in investment demand will take the Index of Industrial Production up.